I'm not necessarily looking at any dollar correlated pairs, but this dollar yen Fibo was really quite good. So there's a lot of people that are looking at the dollar yen right now, looking for pullbacks and getting long. And I'd rather go euro yen, or I guess dollar yen's probably better than pound yen. So I should probably look to the dollar yen over the pound yen. But I love the Kiwi yen. Love to look for more entries there. Although with the RBNZ tomorrow, I'm going to hold off doing anything today and try to take advantage of some of those deeper pullbacks we could get. But I think the pound yen, really, I should nix with this new pessimism, and I should look for more dollar yen movement. And I can see all the 20s here in play. I should even make a note of that. Look to replace okay, so I think I should probably start winding down these pound yen positions and start looking at some more dollar yen positions. Okay, that being said, so I was curious, okay, where are some of the levels to watch? I don't have a lot of movement coming back to the wave. There's an argument for being a little cautious because you can see that we've got a pretty healthy distance now between lows and the wave. It's about double some of the larger spaces between the low and the wave back in here. Although we've had situations like this, but it's been staying pretty consistent. So we kind of have an argument for overextended here. I won't call this parabolic. Overextended here? Possibly. So aggro is obviously going to be here. We have our conservative down there, which I have not a lot of faith that we're going to see, although you never know. I like the fact that the aggro is potentially a common level, past resistance, coming up on some support perhaps. I like that. So I started drawing some Fibos here to get some clarity, but I'm thinking, gosh, a lot of small major moves. And one of the things I tell you all is that sometimes when you draw the quote-unquote right Fibo, and of course the subjectivity of that, I mean, is there any subjectivity in, is there anything but subjectivity in technicals? Whether that be the settings, whether that be the way you're using them. There's so many ways we can look at a Fibo drawing, or really any indicator for that matter. That's why I feel all technicals are incredibly subjective, and only price action coming down to previous highs, lows, common levels, major and minor psych levels. Those are the only objective levels that I think within my, all the arrows in my quiver, those are objective to me. Even trend lines are subjective. Okay, so anyways, I started looking at Fibos, and I started just drawing them and asking myself, well, am I seeing, once I draw it, am I seeing that there is respect for the levels once I've drawn them? So this was a draw from the high of, as you can see here, the 13th to, it's a pretty small one, the 15th. It's a pretty small one, isn't it? 13, 14, 15. So as I drew this, I thought, well, it's pretty small. It's actually more of an area of extension now. And I started looking at all the levels that were in play. Here, doji right there. See the resistance in here, right? The resistance at the 100 isn't that big a deal. That's just coming full circle. So when I see resistance at a 100 level, it's not as telling to me. But then the 1618 was a little bit, I wouldn't say it's respected, but we did fall shy of it. But look at the resistance. Actually, that should be resistance. Look at the resistance. And shy of the 1618. But then, boom, nail the 188. Oh, that's a pretty good one. But then we started losing some support in here. Okay, that's one level I could have looked at. What's another level I could have looked at? I could have drawn this one all the same too. Not as good, right? Not as, although the support seems to be coming in this area, although, let's face it, we also have a minor cycle level around 90.20 in that area as well. Up in here, that 90.20 is going to be in play. So there's two levels, ultimately, that I think were interesting. One was that very short extensionary. Now, if we really are topping right now, the next level to, the next Fibo to pull would be this one. Now remember, depending upon the Fibo that you pull, you're either looking at upside resistance or downside support. So ask yourself, what do you need? You know, before you even start drawing the Fibos, I should have prefaced this, the first thing you need to ask yourself is, what am I looking for? What do I need? Upside resistance, or am I looking for downside support? Because depending upon the answer to that question, you're going to be looking for a last major move that's a rally or a sell-off. If I'm looking for downside support now, this 23.6 pretty much tells me why we're stalling in this area, along with the 90.20, along with the 90.00. By the way, the low yesterday was 90.31. I'm sorry, the low today was 90.31. The low yesterday was 90.39. So at 23.6, not spot on, but at least gives you an idea, along with the major and minor cycle levels, which are more objective, tells me why we're stalling here. Downside support. So if I was actually going to keep this on my chart, I would go ahead and paint it lime green to indicate the downside support. When I want to go ahead and look for the reason we might have topped out here, that's where I need to look for the last major move. That was a sell-off. Now, it had two of them. That one really didn't tell me that much of a story. It didn't really line up all that well. Now, think about the way this one was moving. I know it's kind of hard to see, especially when we have the luxury of, but notice here, I'm going all the way back to, this is the 16th. Going back to the 16th. Notice how it nailed the 121.7. Now, at the time, this would have been a sell-off that you would have used to project upside resistance. Nail the 121.7. So you're thinking, okay, I can trust this thing. Came down to the 38.2, went up. It kind of ignored the 161.8, but I still remember that it's respecting some of these other levels. And then it nailed the 188.6. Okay, so you have to have a reason to respect some of these levels. And all of them will sometimes give you some kind of insight. I mean, take a look here. It's not like there's no guidance here. This is the subjectivity of Fibo. If anybody tells you you're using the wrong Fibo, they have no clue what they're talking about. Because Fibonacci is not a trading tool. It's the way you measure contractions and expansions in nature. And this is just a reflection of our human nature. And boom, there's your use of Fibonacci. There's no accepted way of saying this is the only way you draw Fibonacci retracements. It was never designed to be a trading tool. So last major move, and then, kind of what am I looking for? Upside resistance or downside support. And then I start testing last major moves. Okay, and the one on the yen here was just, I think, pretty cool. Both of them, not just the upside resistance where it topped out at 188.6, also the downside support that's showing the 23.6% support. So pretty neat example of Fibo. And then of course, overlay all the other things you know, major and minor cycle levels and so forth. I mean, the high here is 91.01. I'm sorry, the high here is 91.24. 91.24. The low for this candle was 91.01. 91.24. If you did nothing but look at major and minor cycle levels, would you be fine? Probably. High here yesterday was 91.17. 91.20 again in play. The low 90.39. Not as easy to identify. Today, 90.31 is that 30 area. That 30 area isn't a minor or major psych, but it does indicate that because there was a failure to get to 90.20, we're likely to snap back up to 90.50, and we're seeing that on both these days. Okay? So even if we're kind of falling at a level in between our major and minors, remember, failure to get to the next one down or failure to carry higher to the next one up gives us insight into where the next move is likely to be. So if you supplement your Fibo with all that, then you'll probably end up with a clearer picture. Not probably, you will. You will.